We're seeing the markets under some pressure ahead of today's Fed meeting. What are you expecting for today specifically until we get to 2 p.m. Eastern?
Hey, first of all, good morning, Frank, and thanks for having me back on your show. I do think it's going to be extremely volatile. We've been saying this last time I was on the show with you. We talked about the volatility. We think it's going to be a pretty volatile time, even through 2 o'clock, even all day, even for the rest of this year. One thing you've talked about the market. We saw that the markets are down about 4% off their peaks. We do think risks are increasing. Valuations are high. The S&P 500 PE ratio in forward earnings is about 20. The 25-year average is about 16.5. There is a lot of uncertainty about the next Fed action, and we are seeing surging bond yields. One question we get from a lot of our clients is, how bad can it get? We do think the 200-day moving average, 4,700 in the S&P, tends to be sort of that worst-case scenario. But the Fed meeting today, though, is the most important thing we're watching. I think, Fed's not going to do anything. We know that.
Okay, well, Gene, let me jump in for a second, Gene. You mentioned you're watching the Fed meeting later today. So what are your expectations for that Fed meeting? What are you expecting Jay Powell to say? Because you also believe that we're set for a bit of a pullback, more than a bit, actually. You believe that the S&P might fall all the way back to its support level of 46.96. So does that mean you're expecting a very hawkish Jay Powell later today?
A little bit. I think Jay Powell, first and most important, if I could talk to Jay Powell, I would say, please keep a lot of your thoughts to yourself because you still get a lot more data coming up. I do think his tone is going to shift a little bit. He's going to say, I lost confidence at where inflation is headed, but he's still going to likely, in our opinion, suggest that rate cuts are still coming later this year. I think he's also going to say the June meeting is much more important. Think about this. We get 2 CPI reports and 2 payroll reports before the June meeting. And then one thing we're optimistic in terms of why the Fed will still cut rates.
But one thing, Gene, if you think he's going to guide us to cutting rates, then what leads to this pullback that you're calling for? I mean, 46.96, that's a deep pullback from where we are right now. And then, by the way, press conferences, they don't work that way. He has to actually tell us what he's thinking.
Thanks. I was just hoping to have a phone line right to Jay Powell. No, but seriously, no, we do think the Fed will still cut rates later this year, but I think he'll have some caution. He'll talk about very data dependent. He'll talk about some bounce back in some recent inflation readings. But what we're looking at the big data picture. We're looking at shelter inflation. Yes, it's high, but asking rent, a forward-looking indicator, is slowing down. The labor market is slowing down very, very, very slightly. You see job quits are rising. You see the number of jobs available are slowing down. All this together, we think the Fed still cuts rates later this year.
All right, so you haven't told us what pulls us back to what you're concerned about, the support level of 46.96, but I'm going to move on, actually. Small caps, you're bullish on small caps. If you look since April 16th, when Jay Powell indicated higher for longer, believe it or not, small caps are actually outperforming the broader market. So you believe right now this might be a catalyst for small caps, that if we get the idea that you're believing that Jay Powell's going to signal rate cuts, are we going to see more upside action for the small caps in your mind?
Yeah, as you posted earlier, we think small caps are close to being in a bear market, down 19.7%. That's a big drop. But I think the key point here is that small caps, first of all, valuations are extremely cheap. But you don't buy an asset class based on valuations. You buy in forward expectations. Earnings growth for next year and the year after are looking at 15, 16% for small caps. So we do think small caps are looking pretty attractive from a valuation and from a fundamental standpoint.